Fed Chair Jerome Powell spoke at 1:30 p.m. and the market tanked. So what did he say? What does it mean for us as investors? And what should you do in response? There are 4 key points that Jerome Powell covered, and I will break them down in detail. I'm going to give my perspective as well as what you should do. Please like, subscribe, and don't forget to share your thoughts in the comments. Let's dive right in. All right, the calm is over. We're entering a volatile, hard to predict environment again. The soft landing narrative
It's starting to fade.
Powell acknowledged that JP Morgan is already pricing in recession risk of 60% in 2025. But the kicker, tariffs.
Here we go again.
So Powell warned that they're not only larger than expected, they're also stealth inflation bombs because companies now have political cover to quietly raise prices. And it's not just pricing. Corporate CEOs are already bracing for another round of supply chain disruptions. Think back to COVID. Powell even brought up the car industry as a specific risk.
You can look at the car companies, which their supply chains are likely seem to be on track to be disrupted significantly, and you would worry that that process will take some years and that the inflationary process might be extended.
Add to that the fog of new trade, fiscal, and monetary policy, and what you get is long-term policy uncertainty. And when business leaders don't know what's coming next, what do?
They wait.
They pause and investment freezes. So what's the takeaway? If uncertainty is the new baseline, how are labor markets, prices, and policy reacting? That takes us to point number 2. So the Fed may be forced to choose between its two mandates for the first time in years. On the surface, the labor market looks stable, but Powell peeled back the curtain.
I think he's onto something.
Immigration has collapsed, meaning our labor force growth is basically flat. Demand for workers also slowed, so unemployment hasn't spiked, but it's a fragile balance. And there's what Powell really wanted us to know.
Of course, the people being laid off in government, this is highly significant to them. We don't know how big that's going to be. Right now, it's not big enough to affect a workforce of 170 million people materially.
That's not just jobs today. That's long-term damage to U.S. productivity, research and development, and future innovation.
It's a hard one.
And now we hit the real tension point. Powell said if unemployment rises and inflation rises, the Fed may have to choose. Spoiler alert. He hinted that the Fed might favor price stability over jobs.
Well, we're always going to be aiming for maximum employment and price stability. That's what we do. I do think we'll be moving away from those goals probably for the balance of this year.
So what's the takeaway? There's a twist. Markets may be assuming that the Fed will save the day, the infamous Fed put.
Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no.
But that's where the Fed lowers interest rates to save markets, and Powell said, don't bet on it. The Fed is not stepping in just because the market is nervous. Let's talk markets, and this is a big one.
I'm listening.
Powell outright killed the idea of a Fed put.
Markets are functioning, conditional on being in such a challenging situation. Markets are doing what they're supposed to do. They're orderly and they're functioning just about as you would expect them to function.
He also talked about bond market weirdness. Why are Treasury yields rising while global yields are falling? His answer?
I think it's very hard to know in real time. I've had a lot of experience with significant moves, for example, in the bond market, where there's a narrative that people land on, and then 2 months later you look back and go, that was completely wrong.
Oh, and QT, that's quantitative tightening. So the Fed is slowing the pace of balance sheet reduction, not reversing it.
We should all just be playing defense.
So if the Fed won't step in, who will? Maybe nobody. Which brings us to the biggest structural risks ahead. Now, this is where the interview hit another level. Powell pulled no punches here. The U.S. is on an unsustainable fiscal path.
What does it mean?
And it's not because of spending on random programs, it's entitlements and interest payments. That's where the real budget pressure is building. Then came the banking system.
There are some banks, it's mostly medium and small sized banks, who have elevated concentrations of commercial real estate, some of it troubled, and we've been working to make sure that those banks have a plan, have capital, and can absorb the losses that they're doing.
On crypto, the Fed expects stablecoins to become mainstream, but only with heavy regulations. A legal framework is coming, and fast. And the wild card, artificial intelligence.
Technology evolves and people worry that it's going to replace human labor and people will be unemployed. And that hasn't been the case. It may be the case in the short run, but in the long run, what it's done is raise human productivity and therefore living standards.
So where does this all leave us? It's a Fed that's more cautious, a market that's on edge, and an economy that's facing not just short-term cycles, but longer-term transformation. So what is my take, and what should we do?
Hey,
Let's hear what he has to say.
All right, uncertainty is back and the market hates uncertainty. As investors, we must take a wait and see approach. There are bargains out there, but we must be cautious. Unemployment is low and stable, but it's because the slowdown in hiring has been matched by a shrinking labor force, so it's really neutral. To fight inflation, you raise rates. To fight unemployment, you lower rates, but you can't do both. Powell said that the Fed will pick its battles and fight whichever appears to be the bigger concern, but it's a delicate dance. All right, so this was the bombshell and ultimately what pushed the market down. Powell said, don't count on the Fed to bail out the market. This is better known as the Fed put, where the Fed steps in, lowers rates, and boosts or saves the market. To his credit, he said that markets are well functioning and the Fed is not going to enact the Fed put. Womp womp. Powell said that the level of debt is manageable, but the path is unsustainable. Now, we all must be united on this point. The COVID stimulus is what caused inflation, and it blew up the balance sheet with too much debt. And we can't keep kicking the can down the road any longer. As for crypto, he's a fan of stable coins when the regulations are in place, and he acknowledged that AI will be the ultimate productivity booster. Let me know your thoughts in the comments below. I can't wait to read them. If you like this and you want to see more, you could check out my video on tariffs here or my video on PayPal right here. And if you found this valuable, please share this with someone who you think would enjoy this. As always, be relentless.